Hi, my name is Sebastian Bielski. I'm the CFO of ZEAL Network, and I'm glad to be able to present the quarterly statement for the third quarter of 24 to you. As a summary, in the first 9 months of this year, we have achieved a very strong financial performance. We have seen strong revenue growth, strong EBITDA actually growing faster than revenue. We have acquired a record number of new customers. We have increased our gross margin significantly. We've also started a new raffle, which is the first of its kind in Germany. It's called the Dreamhouse raffle, where we raffle off a dream house. We have, on the back of our very strong first 9 months, increased our guidance for 24. We have also announced today a share repurchase offer. As you may all know, the jackpot environment is very important for us for two things. Number one, it's driving our top line, and number two, it also enables us to acquire new customers. For the first 6 months, we had a very good jackpot environment this year, especially in January. We had 4 consecutive jackpots for Eurojackpot. Then we saw 2 more peak jackpots in the second quarter. In the third quarter, we actually didn't see any peak jackpots this year versus 2 peak jackpots for Lotto 6 of 49 in the last year. Looking at our income statement, as I've already said, we had a very good first 9 months of this year. Our revenue grew by 41%. The main driver of that was a 36% growth in the revenue coming from our lotteries business. Our games business, which we started in the second half of last year, already contributed 6.8 million euros. Looking at the personnel expenses, they grew by 54%. A large chunk of that was driven by extraordinary items. For example, we had 1.5 million in additional provisions for potential wage and sales tax liabilities, which are related to previous years. We also had 2.8 million, which was driven by an increased provision for short-term and long-term variable remuneration, which was driven by, number one, the strong financial performance of this year, and then also the share price appreciation. On top of that, we've seen a 19% increase in the number of FTEs from 170 to 202, especially in areas like our new businesses, such as games and social lotteries. Marketing expenses increased by 20%. We especially were heavy on marketing in the first 2 quarters, when we had the good jackpot environment, but we're also very proud that our marketing efficiency has stayed very high in the third quarter, and we also won a record number of new customers, at least for a quarter without a peak jackpot in the third quarter. The direct operating expenses grew by 45%. Main driver of that is the underlying lotteries Billings volume, but also the introduction of games. So there is additional cost related to games, especially in terms of fees that we have to pay to games developers. Increased cost for KYC checks because we had a large number of new customers, and an increased share of PayPal as a payment method, which is more expensive than the direct debit, which the majority of our customers still use. The indirect operating expenses have also grown by 45%, mainly driven by increased costs for legal and consulting services, costs for external service providers, and recruiting costs. One additional cost item that we have for the first time is the house purchase costs for the first 2 houses related to our Dreamhouse raffle. As I already said, EBITDA grew faster than revenue. So revenue grew 41%, EBITDA grew 51%, which again highlights the scalability of our business model and the fixed cost leverage effects that we can see. As I mentioned, the lottery side of our business had revenue growth of 35%. 17% of that is coming from Billings growth. The Billings growth in itself was mainly driven by an increase in the monthly number of active users. So this grew to 1.35 million monthly active users for the first 9 months, which again was driven by a strong increase in the number of customers in our database and also an increased level of customer activity. As I already said, the gross margin was the second big driver of the increased revenue in our lotteries business. We extended the gross margin from 12.5 to 14.5% in the first 9 months. The main effect here was a price increase in our lotteries business, which we implemented in June 2024. The number of new registered customers has increased by 56% to a record level of 807,000 that we acquired for the first 9 months. And As I already said, we have a very high level of marketing efficiency. The cost per lead actually decreased by 24% to 35.54 euros per lead for the first 9 months. Quick update on the progress with our strategic goals for this year. The first strategic goal that we've set ourselves is to improve the billings margin in our lottery brokerage business. We had given guidance of 15% billings margin that we expected for H2. We've actually overachieved that goal. For the third quarter, where we have the first clean quarter with the increased prices, we have achieved a billings margin of 16.8%. For the coming quarters, we expect billings margin to stay around this level. The second strategic goal was an increased brand awareness and high marketing efficiency. Again, as you could have seen on the slide before, the CPLs were really good for the first 9 months. The mix of campaign bursts and always on for brand marketing is really working. We continue to be, especially in the second quarter, to be very successful in customer acquisition around the peak jackpots. The third strategic goal for this year was to grow our games business. We have partially achieved that. There is more than 200 games online now, which is an increase in the number of games. We have also 18 instant win games with lower RTP online. However, when we look at the number of monthly active users, the billings levels, the revenue, that is actually stagnant at the moment, which is a very deliberate choice that management have made, because we still don't think that we have the right games. We're still iterating on the process. And as long as we don't think that we have a good enough product, we will not focus on growth. It does remain a midterm goal for us, though. The last strategic goal for this year was to launch a new charity lottery. We have launched very successfully the Dreamhausraffle, in German Traumhausverlosung. The first draw, which happened 2 days ago, saw billings of 8.6 million. And we also acquired 83,000 customers in direct-to-consumer marketing for this product. As I already said, the billings margin is definitely one of the most important achievements for this quarter. We have achieved a billings margin of 16.6%, which compares to 12.7% for the third quarter of last year. When you look at the drivers of the difference, you can see that 90% of that is coming from price optimization. The price optimization is the price increase, which we launched very successfully in June of this year. As I said, Traumhausverlosung, to launch Traumhausverlosung as a new social lottery was one of our strategic goals. We've done that very successfully. This product has widely exceeded our expectations. We had 8.6 million in billings. As I said before, 40% of that is actually coming from D2C. Again, much higher share of D2C than we had expected. 417,000 unique users have taken part in that draw with an average billings of 21 euros per active user. The most frequently bought ticket package was 10 euros. And we raised also 1.7 million for charities, with the first charity partner being DKMS. We had a lot of questions from investors around the revenue model for the Traumhausverlosung. So just quick explanation with the example of a 5 euro ticket. 28% goes to us as a service fee. The service fee is a fee for our brokerage services. So that covers, for example, marketing and sales. The rest is what's called a stake. So around 67% of the ticket is what's called a stake. 30% of the stake goes to our charity partners. In this case, for the first one, it was DKMS. 30% is paid out in the form of prizes, so it's paying for the house. And then 23% is cost recovery, which covers the operating cost of the lottery. The rest is tax in the form of lottery tax and also VAT on the service fee. One of our hypotheses for the launch of Dreamhausraffle was that we will be able to address a different customer segment, which is not actively playing classic lotteries like Lotto 6 or 49. And it looks like this hypothesis was correct. We have been able to target a very young demographic. So the average age is, or the peak in the age distribution is around early 20s, which is much younger than for the typical Lotto player. And we've also been able to attract a higher share of female customers. So for the classic lottery products, it's around 41% female. For the D2C side of the Dreamhausraffle, it was actually 47%. On the back of the very strong results for the first 9 months, we have also increased our guidance for this year. So the new guidance is 158 to 168 million euros for revenue and 42 to 46 million in EBITDA. We continue to invest into marketing, so we still think that we'll invest between 40 and 45 million into marketing for our German brokerage business. We expect to do around 9 million in revenue for our games business, and we also continue to expect over the midterm revenue growth in mid to high teens with a base year of 2023 up to 2026. On top of the very successful first 9 months, we've also announced a share repurchase offer this morning. The offer price is 44 euros per share, which is a premium of 10% over the reference price. We will purchase up to a total of 568,000 shares. So the overall share repurchase offer has a volume of around 25 million. The acceptance period is between the 18th of November and the 29th of November. The entire repurchase program will be funded by drawdown of debt from available credit facilities, and all acquired shares will be cancelled following the repurchase. So in summary, what are the key takeaways of the first 9 months? We had an exceptionally efficient and extensive acquisition of new customers. Again, we've acquired a record number of new customers, over 800,000. We saw very strong top-line revenue. We saw even stronger bottom-line revenue. We improved our gross margin quite dramatically. We've very successfully launched a new charity lottery with the Dreamhouse raffle. And we have also delivered a share repurchase offer with a very attractive price per share. Thanks very much.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.